really appreciate your views. You could sit around because we have the management of Escorts joining us. Perhaps could get into more details about how the earnings have panned and what the outlook looks like for the business. Bharat Madan, who's Group Financial Controller at Escorts, joins in to talk about their numbers. Bharat, good to have you on the show. Thanks very much for taking out the time. Congratulations, stellar Q2. Your volumes this quarter were the highest that you've witnessed ever. Do you think this kind of volume growth is likely to sustain? Were there any GST-related transition issues that you faced? And how have you come out of that?
Sure. Yeah. Thanks for the message. I guess in terms of volume, the industry has seen its peak now in this quarter. So I don't think these are numbers which are sustainable because again, it's a seasonal industry. So we'll see probably the ups and downs keep on happening. We never know. Maybe next year we'll see even higher growth numbers. We'll see the numbers even getting beaten up again next year. But having said that, I think yes, there was issues on the transition on the GST front. So we have taken a one-off impact of about 26 crores on the line. Only on account of GST transition issues, especially on the stocks lying with us and with the channel partners. So that effect has been factored into these numbers. So otherwise, the numbers still, I think, in terms of margin, they look pretty good across all sectors.
Okay. What were the steps which were taken by you guys to ensure such a massive expansion to operational performance and profitability as well? If you could just walk through that.
Well, obviously, the major portion here obviously is coming from the operating leverage because the volumes which have been driving the profitability in this quarter. And other than that, obviously, there have been some cost initiative also which the company has undertaken, which have really started paying results. We started getting some accruals on the P&L on that front as well. So I think both the factors we expect, I think things should continue. On the cost front, definitely we have been continuing on this, which is our internal target to really look at doubling our profitability numbers in the next 3 years, coming from major cost expansion side and on the market share side. So we expect the things will continue. I think we should be able to hit those numbers.
Right. While cost reduction is something you've been focusing on for some time, did the company also take price hikes to offset GST impact or input price hikes? How much was that and when did you take it? And if not, then what's the strategy going forward? Will that happen in this quarter, Q3?
Yeah, so we have seen the pressure on the commodity prices, especially in the first quarter. So the impact for that got passed on in the second quarter. So we did take price increase, which was roughly about 1.5% in the first quarter, which has been in the second quarter, which has been passed on. And we continue to face some inflation as of now. So I think let's see. I think we'll wait and watch depending on how the industry will respond. So we will take a call on other price hikes somewhere in Q3 or Q4, early Q4.
On a like-to-like basis, could you highlight how the festive season growth has been? What kind of volumes did you clock in last month as opposed to now?
In terms of volume, you look at the two combined months of September, October. This time the season contributed 2 quarters. So the season September, October combined numbers, I think we've seen about 23% growth happening on our wholesale numbers. And on the retail side, I think the growth has been roughly in this range, about 16 to 18%. So it has been strong. So I think cumulatively so far we have grown about 18% in the first 7 months of this year. And we expect the industry should deliver about 13-14% sort of growth on a full year in FY18.
Okay, and give us a sense on how you are looking at tractor demand panning out. This has been a great year from an agri output perspective. How are you basing your future forecasts on the demand patterns that you've seen thus far?
Well, our expectation is looking at the monsoon what we had in this year, also the trend which are there on the ground, and also knowing the fact that we are entering into an election year in FY19. So we expect next 5 to 6 quarters should continue to show good growth in the tractor business. So only any correction which we will see will only happen post-election will be somewhere in FY20. So next year also should see 8 to 10% sort of tractor industry growth is possible.
What's the ASP you're seeing currently, and when are you at? And when, particularly when you benchmark it to the historic ASPs, there's quite a bit of variation. Could you throw more light on the trend as far as ASP is concerned?
Sure. I think one of the key reasons for this quarter, if you see a lot of concerns which are getting raised, is on the top line growth. The volume growth has been high, which is about 30% plus, with the top line growth has been only about 23%. I think one of the key reasons there is because in post GST now the tractors have been subjected to 12% tax rate. which earlier was exempted from excise duty. So there's only 5% VAT which was applicable. So effectively there's a 7% hike which has happened on the taxes on tractors post GST. So that 7% has been actually not been passed on to the consumer. So where all the manufacturers had agreed to absorb that with this revenue neutral rate. So earlier we were never getting the input tax credits, and now we started getting that. So really, if you see, the top line has declined by 7% only on about GST, but at the same time the costs have also come down by a similar amount, both on the material cost side as well as the overhead. So across all, so that's the impact which is really there because of GST. So the top line growth will be slower by 7%, and the volume growth is higher, but overall impact is not negative.
Thanks so much for highlighting how your earnings have been, Mr. Madan. Good to chat with you today, and good luck for the future quarters ahead as well. That's Escorts, just a little soft in trade, mildly about 2 odd points lower in the markets right now. But the rest of the market is holding out very smartly, continue to look good at the 10,400 mark. In fact, we are building on very nicely to that level, 10,040 now on the index. A good 1% notch up is what you're seeing, and it's clearly PSBs which are really fueling the Bank Nifty and thereby the rub off on the rest of the markets. Small caps in the lead as always, 1.25% higher over there. Quick break. When we come back, more in the markets.